Let's bring in Francisco Blanch. He is the head of global commodity research at Bank of America Merrill Lynch and a Bloomberg Best forecaster on energy prices. And he joins us from his firm here in New York. Mr. Blanch, welcome to Bottom Line. Thanks for joining us today.
Yeah, thank you for having me once again.
Sir, U.S. crude oil supplies fell more than expected. Does this signal an improvement in demand?
Well, I think it signals, for the most part, a very low crude oil import number. We've had imports roughly at 7.5 million barrels a day this past week, compared to levels of around 8.5 to 9.5 million barrels a day in previous weeks. So imports are really very low, and that's one of the reasons we've seen that drop in inventories. Demand is actually not great. It's not horrible, but it's not very strong either.
Right.
It's been weakish the whole year.
Well, on average, a gallon of gas costs $3.50, maybe a little more this year. When's the last time gas prices had such a negative impact on household budgets?
Well, I think you have to go back to 2008 to see such a negative impact on household income. But back then you had very high leverage in the system, because you had, of course, the big real estate bubble that built in the years prior, and you had also a lot of consumer debt. What we see now is that consumers are more comfortable drawing down their savings. So I don't think it's a horrific impact on consumer budgets. I think it is not great, but certainly it could be a lot worse. I mean, back in 2008, obviously we saw prices being a lot higher than they have been today, and that was really negative. So net, I don't think it's a positive, but equally I don't see it as being a very large negative on the economy.
Well, you just spoke a moment ago about imports. Since the United States is an oil importing nation, the money Americans spend on gas leaves this country. How does that impact growth?
Right. Well, that's a big negative impact on growth for sure. But I would like to highlight that North America has the fastest improving energy balances in the world, right? In the consuming world. If you look at Europe, Europe cannot improve its energy balances. Asia is actually seeing a pretty sharp deterioration in energy balances as China becomes an ever larger oil and energy importer. The same for a lot of the nations that are around China in that region. So North America actually, because of the shale oil production and because of the shale gas production, has seen a dramatic increase in output. We've also seen Canadian supplies through oil sands increasing quickly.
Right.
So if you take North America as a whole, yes, you're right, it is a negative impact on the current account, but on the whole, the U.S. is getting a lot better relative to other countries very quickly. And in a world, in the world economy, what matters is your relative position, not your absolute position, as I'm sure you're aware.
Well, if the global economy remains sluggish and events in the Eurozone continue to weigh on the markets, how much downward pressure is that going to put on commodities prices? We're already seeing the effects on oil, copper, and soybeans.
Absolutely, and I think over the next 3 months we'll see some more downward pressure on commodity prices. That's our base forecast. We're looking for Brent to average roughly $100 in the first quarter. We're looking for WTI to average $92 a barrel, so a few dollars below the current levels. And then what we think is going to happen as Europe goes into recession, into an outright economic contraction, we think that the policymakers will respond to the deteriorating economic environment by using whatever policy tools they have available to them. So in the case of Europe, we think that's probably quantitative easing by the ECB. We think it's potentially a Eurobond, potentially fiscal integration. And then also, remember, the Fed can still use QE. They can do QE3 next year. And I think once they're done with Operation Twist, they could be buying they could be doing another round of asset purchases, maybe mortgage-backed securities. I don't know what, but I think those monetary policy tools will really help the economy get back on track in the second half of 2012.
Mr. Blanch, we have about 30 seconds left. What can consumers expect this winter in terms of heating fuel demand? What's the seasonal outlook?
Well, I think the winter has been very weak so far. We've barely had any cold weather so far this year, and I think clearly inventories are for natural gas is very high. Heating oil inventories are also at reasonable levels. So I think we're going to see a relatively weak season in terms of costs for consumers, both natural gas and heating oil, as we go through the next couple months. We're already in December, and the weather hasn't really showed up in a very cold form yet. So it's going to be cheaper fuels for heating homes.
Francisco Blanch, head of global commodity research at Bank of America Merrill Lynch, and a Bloomberg Best. Mr. Blanch, thank you so much for your time today. We appreciate it.